and welcome to our webinar. I am Tyler Bishop, the CMO of Ezoic, and as you can see, I'm probably like a lot of you at the moment. I am in my home office, and here in Southern California, where we, like the rest of the world, are globally affected by the coronavirus. And I'm sure, like a lot of you, there's a lot of uncertainty that that we're all experiencing. And we wanted to set up this webinar today to just address some of the most common things that are going on. And honestly, it's nice to hear from another person that has a unique perspective, and maybe from others as well, as it relates to how the coronavirus is affecting web traffic and the web at large. I think we all have kind of our own ideas about what might be going on, and it's nice to have some data and then also some others that are having similar experiences to back it up. So I'm going to share my screen throughout the day today. I'm also going to be checking the chat and looking at open questions. We also have some polls available, and we'll be sharing all the information that we collect here, both the questions. If there's questions that I can't answer fully here, we have a live blog on the Ezoic blog right now that we're updating daily with information, data, everything that we can about how page views, how ad rates, how the internet at large is being affected by this because of our unique perspective and our proximity to so many websites. We have a lot of information to share, and we're going to be doing that as best we can. This is just one mechanism in which we're going to be trying to do that. So I'm going to go ahead and share here. So I'm going to go ahead and pull up my presentation, and I'm just going to share a little bit of information here first, and then from there, what we can do is we can sort of make our way through some of the questions and polls and things like that that we have. So I'm going to start with kind of what we know and what we can share about the coronavirus and how it's affecting digital publishing. So if you're not familiar with me, I'm the CMO of Ezoic. If I'm an award-winning marketer, if you win awards in marketing and you don't tell people about it, are you even a marketer to begin with? I founded Google's Pubtelligence. It's a global event for publishers hosted at Google offices around the world. Not surprisingly, we've had to cancel most of the ones that we've had scheduled at this current time. We do hope that later in the year that there'll be opportunities to do that some more. I also host the Publisher Lab podcast, in which we record once a week and we talk about all things that are relevant in digital publishing throughout the week. And obviously this is a very topical subject at the moment, so it's something we've touched on the podcast quite a bit. And I'm a Brazilian Jiu-Jitsu black belt and a semi-retired magician, which could not be less relevant at the current moment. Yeah, that's for later. So traffic. So I guess this is one of the areas where I've seen the most questions, both in terms of the web at large and then just inside of forums and communities that I spend a lot of time in, just trying to understand the problems and challenges that publishers have. And what you can see here is this is yesterday, so this is Monday, and I'm basically looking at a cohort of thousands and thousands of publishers. We try to take out a lot of outliers, and so what we're looking at here is what we think is a nice cross-section of the internet in general as it relates to web publishers. So this is excluding e-com sites and B2B sites, but largely referential sites, news sites, niche sites of all kinds, referential sites, tools, games, pretty much everything you can think of. And what we're looking at is basically Monday, yesterday, versus last week is that green line. So you can see just last Monday versus yesterday, pretty stark difference there, maybe about a 10 to 15% difference in terms of impact, and then versus the Sunday, which was the day before. So you can kind of see Sunday versus Monday, you're going to see a natural kind of difference, but in general, you're seeing week over week a small decline in overall traffic for a nice cross-section of sites, although we are seeing that there are categories of sites that are seeing much higher traffic. So categories of sites that are generally seeing lower traffic. So I just kind of bounced in and wanted to see which sites were being the most dramatically affected. So the average might be 10% to 15% in some cases at the current moment, although I would, add the caveat that this is very much evolving. I think that daily lives are being disrupted quite a bit right now. And as things sort of settle in and we have a new normal maybe for the foreseeable future, and then maybe things evolve and shake up again, these things could change. What we're seeing is sites that are generally kind of seeing a little bit lower traffic are, housing sites, DIY sites, things that are related to the home in general, and searching for housing, how to do things around the house. You'd think that that would change if more people are confined to their homes. So we'll see. Business related topics, obviously, small biz, big biz, pretty much anything related to, um, loans and a lot of other different types of information related to basically running a business. Sports, obviously, with a lot of events being canceled and even leagues canceling their seasons. That's a big area. Educational references, so anything that you would imagine that kids are using for school or college age students are using as references, writing papers, that may pick up, and we may see that rise here soon with the amount of remote schooling that's going to go into effect. But one of the things that I think is important to understand is that a lot of things are being disrupted right now. And so people are sort of settling in. So a lot of these things could see quite a big shift in the next week or so, and we will keep that updated. Wikis and referential sites, coupon and money saving sites. Again, a lot of these things are the types of things that you would expect to see improvements in terms of traffic, as the economy is going to be affected, and you would imagine people want to save money. So again, we'll try to keep a lot of this material updated and maybe do more of these webinars if they prove helpful. Travel sites, I don't think is a surprise, but sites that we are seeing higher traffic, at least initially, are productivity tools and web applications. So calculators and other tools and things like that people may be using to, resize images, check on web statuses, calculators, applications, all kinds of different things like that. Entertainment-based sites, so people are having more idle time, so you are seeing more traffic on sites related to information about entertainment industries, but then also just general sites that are kind of time-killing type sites. And then religious sites, maybe not a surprise at a time where there's a lot of uncertainty and fear. Gaming sites, again, kind of speaks to the idle time. And then, just general idle time resources. I couldn't really bucket it better than just kind of saying this is the kind of a site you'd go to when you just got some extra time. And so for publishers that earn revenue from display advertising or programmatic advertising, ad rates are something that everyone will be keeping a close eye on. So this is up to date as of basically yesterday. And so what we're looking at here is January, February, March on the left-hand side, 2019 versus 2020. So in general, we're seeing a small dip in 2020. Some of this could be related to a lot of the changes as it relates to browsers and cookies, specifically Safari. Some of it could just be some natural seasonality as it relates to really just kind of 2020 versus 2019 for a lot of different types of businesses. It's an election year, and so you're going to see a lot of things rise towards the end of the year. So some of that could be accounted for, but ultimately, we've already seen January and February have a slightly lower start to the year than what we saw in 2019. And actually, in March right now, things look a little bit closer, but I will add this caveat of March takes a pretty steep rise overall in ad rates in 2019, starting in pretty much this week. And so we've seen that remain flat so far, and I would expect that to continue. So even though on the right-hand side here, it looks like things are pretty close together, I would imagine that this is going to change and that you're going to see ad rates not so much decline as they will just kind of stay flat at the moment. At least that's what we're seeing. They've pretty much stayed flat since the beginning of the year. So if you're kind of hoping that ad rates don't fall off a cliff, it doesn't seem like that's going to happen, at least at the moment. Although I will kind of preface that with a couple other things here. It seems like so far what we've seen is the impact of the global coronavirus has really kept ad rates from rising how they normally would throughout the first quarter. So normally you'll see them drop off at the start of the year in January, and advertisers, their Q4 campaigns run out. And what you'll see is that they'll increase their budgets and campaigns and things like that throughout January, and then February and March, they really start to ramp up. And toward the end of every quarter, marketers, we're sort of not great at budgeting, and large organizations are particularly bureaucratic in this way that if you have a budget and you don't use it, you lose it. And so in this case, what you see is a rise in ad rates towards the end of the quarter. And I think what we'll see in March of this year is that they'll just pretty much stay flat as they have since January. And this is a good representation of that. So you can see this is the start of the year. Everything drops off after Q4. Things kind of peak on Black Friday back over here. And then this is this year in January. Normally what you'll see is you'll see things kind of start to rise up and then, kind of start to peak out here in March. But what we're seeing is it's been flat since January here. And you can see start to dip here at the end of January, February, things kind of pop back up. And this is normally where we might start to see things kind of spike and rise back up towards the end of the quarter. But you can see here as of Thursday, March 12th, which is our index is usually a couple of days behind because the revenue data takes a little bit longer to pull in. We're seeing that the index is, it's a 56, which we're hitting 56s back here in January. Typically, when you get into the middle of March, you're going to start to see things trend upwards, at least not quite as low as they were at the start of the year. And this is one of the reasons why I believe that we'll continue to see it stay flat. Although the stock market did recover a bit this morning here in the U.S. Yesterday was one of the largest drops in recorded history. And so one of the things that happens is public companies, which are the ones that are obviously have some of the largest marketing budgets at large, when the revenue is adjusted for the year, they have to make cuts. And one of the easiest and fastest ways to make cuts is to the marketing budget and the amount of money that they're spending on advertising, especially when consumer spending is lower. And in many cases, when you're in marketing, and I know this firsthand, you sign a lot of different types of contracts, but the one area of business where you don't have to sign contracts is if you're putting money into Google Display or pretty much any programmatic display budget. You can go in an afternoon and you can take a budget from $100,000 a day down to $100 a day or $5 a day. You can really cut those budgets with the click of a mouse. And so digital budgets are going to be the ones that are most quickly impacted. The good news about that is that they're also the ones that in many cases can be restored the fastest. So as things start to come back and maybe some of the initial fear, and maybe we get better news as it relates to how this is going to impact the economy and daily life moving forward, this may be an area where things bounce back. And surprisingly, if marketers feel like there's an opportunity, they may be spending here more heavily. So there is a potential upside. I'll also remind everyone that every 4 years there's an American election, and that usually has a really strong impact on both the economy and ad rates in general. So there is some good news heading into the future as well. So one of the things I'll remind everybody about, because I know one of the things that's probably at the top of everyone's mind at this current time is what can I do? So what can I do to minimize the impact of something like this on my business, on my website, on my revenue, on the money that I have coming in? And I would really emphasize inventory value. So in terms of traffic and content, I won't attempt to give you a lot of specific advice. We have sites from all kinds of different types of categories and niches on here. So I'll leave that to you for now, but I can share some advice as it relates to manage your ad inventory, meaning the space on your website that advertisers are going to bid on, and ultimately you're going to get paid for it. So advertisers bid on thousands of different things. This includes the device type, demographic information. If you've ever set up a Facebook campaign or Google campaign, maybe you haven't, there are, hundreds of different things that you could pick, and those things end up being, these very, very defined types of people that you can target through digital advertising. One of the things that I've always found interesting is that most publishers treat and display ads to every visitor the same way without controlling the price, supply, or the demand. So this is one of the things that we do quite differently at Ezoic. So if you're an Ezoic customer, this is something Ezoic is doing for you. And it's something that we've done since the very beginning. And that's different visitors are going to have a different amount of competition from advertisers. So right now, competition is going to be much lower in general across the web at large, but that's why certain traffic is going to get is ultimately worth more than other traffic. So you may have multiple sites. Some sites are in one niche, some are in another. You realize that the ad rates, the different types of traffic are going to play a big role in what they get paid. A lot of it has to do with what types of advertisers are targeting those sites, but also the types of visitors that you have and the competition that they have. So certain types of visitors have lots of different advertisers trying to basically bid to show them ads. And as a publisher, one of the things that you can do is you would think just showing as many ads as possible gives those advertisers the ability to, bid and send you money, and you can, maximize the value. But the truth is, actually restricting supply in many cases is the best way to drive up ad rates. And this is really something that has to be done on a per visit basis. So a lot of you may understand that this is one way that Ezoic will generally optimize visitor revenue, which is essentially trying to figure out if there's going to be things that affect the length of a visitor session. So would they bounce because of an ad location or something related to the content, and then try to alter that for those types of visitors so that they don't bounce and they spend more time on the site. Ultimately, what you're going to find is if you're essentially working on a site and you have an ad that's causing a higher bounce rate for a certain type of user, let's say users coming from Google search or email newsletter, simply by altering the ad combination for those visitors, you could figure out pretty quickly which ads were causing that, and you could extend their session, and that's ultimately going to result in a higher page RPM and session RPM. But it's really this area of supply and demand that I think is the most interesting right now, where you're going to have advertisers, fewer of them, honestly, going to be bidding. I mean, you have restaurants and bars and a lot of other types of businesses here in the United States already closing. Across the globe, you have the same thing. So those are advertisers that are not going to be spending money right now. And so what you want to be able to do is better control supply and demand. So one of the things that Ezoic does well is understand things like device type. So, on the left-hand side here, you can see that 970 by 250 ad, which is normally a very high-paying one, actually pushes all the content down on a traditional MacBook Air when it's not on a widescreen or something like that. And so when it pushes the content down, it's going to affect viewability. It may impact the user's experience, but it's going to dilute the value of other ads on the page. And so it's going to get a lower bid. And visitors coming to your site from a widescreen desktop device, they may be not affected by this. The content is still there, and it may not have the same impact on viewability and the chance of people scrolling down further down the page and viewing other ads as well. So that's a really important distinction from the standpoint of that understanding of how different ads are going to affect the price of other ads can really impact your total revenue. So Ezoic adapts this automatically based on things like device type. Another good example is whenever ads actually affect viewability even on the same screen, and ultimately how advertisers bid on multiple ads on the page. So this is an example I really like because it's not necessarily intuitive. So once again, we've got our 970 by 250, which is normally a high paying ad. As a marketer, it's one of my favorite ones. It's one of the ones I bid on most commonly. And so what we have here is a larger ad size at the top, but it's ultimately resulting in less page revenue. And actually that ad is getting paid out less than what you would expect. And you actually have a smaller ad that's earning more. And you ask the question why, and it's because this 300 by 600 Here over in the sidebar is one of the best performing ads on this page. It has great CTR, great viewability. Advertisers base all their bids on historical data. So this may be an ad that's performed historically well. The ad exchange that's serving out this ad, in this case it's Google's ad exchange, has data for advertisers. In many cases they will automate campaigns. So what you'll see is advertiser may set a target CPA of $100, and they'll realize that a 1289 CPM for this ad will get them their $100 CPA. This is all going to happen programmatically and automatically through Google. And so Google is going to adjust all the bids. Let's say that both these are ad exchange, or, maybe this is a header bidder. What's going to happen here is you're going to see bids adjusted for both ads to compensate for the fact that this one is going to get a higher bid. But advertisers only pay for impressions that are viewable in many cases. If less than 50% of the pixels are not viewable, it won't get paid out. So you can see in this case, unless someone is going to scroll down and have this entire ad viewable for more than a second, you're going to miss the revenue from this, high paying ad here. So in this case, showing a smaller one is going to actually get you paid more. And so this is another thing that Ezoic is adjusting automatically. And then the last example I really like is just understanding how different countries will bid on inventory. So the 300 by 250 ad, that nice square one there that we've all probably seen everywhere. It works on mobile devices and desktop. The competition is generally really high for it, so it's a really good tool in ad ops to be able to go in and just show where different types of, you can kind of put it anywhere. But the thing that's I find interesting is it's the most popular ad size globally, but one of the most popular ad sizes in Sweden is actually this 250 by 360. It's this weird size. I've actually never had a 250 by 360 in any campaign that I've had. I should probably add some. We have some publishers in Sweden, and it actually pays out much higher in that country because of the fact that there's so much more competition. So if you're not an Ezoic customer and you're in the ad op space, you should alter your inventory so that you replace 300 by 250s with these 250 by 360s in Sweden. It'd be a really good test to run, just from the standpoint of we see it generally. Norway has a similar ad size for that you can put in place of 300 by 250s that you can replace it with. And again, once again, this is something that Ezoic is doing automatically for all of our customers. So it's really a mixture of things you can do to control your ad inventory during this time. Again, if you're a Ezoic customer, this is something that the system is doing automatically. I'll give you a couple quick tips around how to kind of maximize Ezoic's potential in this case. But the things that you can control and can't control about the value of your ad inventory. The things you can't control are basically the visitors and all their attributes. So what device they come on, what time of the day they come, if it's raining where they're at, those are all things that are basically brought in that advertisers are going to bid on. But what you can control is the supply and demand. So you can control what types of ads show on the page, what sizes they are, and how many there are, and then also where they're at. And the bids on those ads are going to be based on historical data. And Ezoic can read that and understand what is the best combination, both in terms of number of ads, placements, sizes, types, all that kind of stuff, to figure out how do we maximize the revenue without harming the user experience or the session duration. So one of the big things is just having as many placeholders, both on desktop and mobile devices, as you can. The more that Ezoic can test and understand about the value of your inventory, the more flexibility it's going to have in being able to price it. And then also being able to make sure that each different type of page that you have on your site. So all site pages are a little bit different. So if you just kind of have your placeholders set up across your site, it's worth looking at different page types to make sure that you have placeholders throughout the site and that they're not appearing in any weird places like your author boxes or anything like that. Even though Ezoic may learn that's not a great place to show an ad, if it's at the bottom of content and that's historically paid out really well, you'll get ads showing in wonky places unless you're really particular about exactly how those show. You can use settings in Ezoic like place an ad on its own line and things along those lines. So And that's it. You guys had my slide at the very beginning about questions and comments. So I do have an open comments box here. Over on the side, it doesn't look like I have many open questions. I'm going to bounce back into my, I'm going to stop my screen share here. There I am. Welcome back. And so if you have questions, I'm going to leave this open here for the next 2 or 3 minutes, and I'll answer any questions you put in here. I'm also going to take a look at our poll here. I'm going to launch it right now. So if you want to go ahead, the poll is in progress. So anything that you want to place in there would be helpful. We'll share the results of the poll. Here's we kind of have an opportunity for people to vote in real time. If we get enough answers through, I'll kind of share with you what I'm seeing on my end. But I wanted to give everybody an opportunity just to share any thoughts that they have about the coronavirus and its impact on their site in particular. If there's comments that you have, you can leave them in the question box. I'd be happy to share with the rest of the audience as well. Again, I'm going to bounce back to screen sharing just for a moment here while the poll gets finished up. So we're back here, and I'm going to go ahead and hopefully you can see my screen here. So if you go to ezoic.com and you go to blog, we have this right here, which is how the coronavirus or COVID-19, we've got them both in here, keyword research, and web traffic and ad rates live updates. So if you go in here, you're going to find that we are updating both these graphs and charts as it relates to how web traffic is being impacted, how ad rates are being affected. We're updating these charts each day. And then the resources that we have are this recorded webinar will be in here. We've got another video that explains how the market affects ad rates. This webinar and future webinars will be marketed in here. And then just the summary of current data and best practices, and then also advice for our Ezoic customers as well will be in here. And then just generally all this information we'll try to keep updated as best we can so that we can provide as much information that's helpful to all of you as we can. So the results from our poll, it looks like at this current moment, what concerns you the most in digital publishing? It looks like the economy at large, 57%. Unpredictable traffic trends was about 29%, and then ad rates was about 14% of the audience here. So I think we're all sort of kind of looking at the economy right now with a little bit of concern, but I do think at least what we can say from an encouraging standpoint is that we are seeming to, as an entire human population, seem to be reacting to this pretty quickly. And the market doesn't really like fast things like that. But overall, the economy was doing really well before this. We'll see how it ultimately impacts consumer behavior. But I do think that we will see things start to even back out here in at least a few months as things start to bounce back. That said, traffic trends, it's really anyone's guess. I think a lot of the things that I probably shared so far have been maybe a bit surprising, but I also would say I expect them to change, maybe even as early as today in some cases as people start to adopt new behaviors on the web. Ad rates are anyone's guess as well, although I've shared that I think that they'll stay flat largely for right now. And then what is your best source of information about your website during this time? No one said the news media, so everyone's a little bit skeptical. Other publishers with about 14%, Ezoic, 43%, so that's great. And then forums and communities is another 43%. So yeah, just basically trying to hear from the voices of many out there, and I'm glad that we can be a source of information for so many during this time. And I have one question that says, What are your views on affiliate revenue? We have seen traffic drop, but does this affect affiliate revenue per visit or 1,000 visits? Yeah, I would say it definitely does. It's going to affect affiliate revenue in a similar way that it's affecting ad revenue, and that my guess is that one of the biggest reasons why ad revenue is going to be affected or at least stay flat is because advertisers in many cases are adjusting bids based on CPAs, and some of this is happening automatically. So CPA is cost per acquisition. So if I sell toasters online and I know that I can spend $15 and get a customer to buy a $30 toaster, make a $5 profit, that's great. But as consumers are adjusting their spending habits, specifically because maybe they're not working or maybe they have questions about the economy, you're going to see that CPA go up because the ads are not going to have the same effect. People aren't going to be clicking on them and buying stuff, and affiliate revenue is going to follow that to a T. We see that all the time. If you're, in an affiliate niche where, it's specifically if it's disposable income, meaning it's something that, people in that coveted demographic of 24 to 38 adults, US, Canadian, European, Australian, APAC traffic, where you're going to have this middle class that has a lot of disposable income. That is specifically the ones right now that are going to probably be the most hampered as it relates to spending right now. And I would imagine that you're going to see affiliate revenue be affected maybe more dramatically in this case. And that's just a guess because of impulse buys and things like that might occur. But the answer to anything like this is always, it depends. But I would say if you're going to make me paint with a broad brush, that would be my guess. But good question. If there aren't any other questions, I'm going to end this webinar. I'm hoping that it was helpful. I will make the recording available to everyone, so you can go back and review if you missed the start of the webinar. Additionally, we will do more of these if it proved helpful. If it was helpful, please let us know. You can email me at tbishop@ezoic.com. That's T Bishop. Tyler is in my first name, T, and then Bishop, BISHOP, @ezoic.com. And if you have comments or feedback about the webinar or things that you would like to see from Ezoic in the future on this, we're all trying new things. And I think that, it's been a while since I've been able to interact directly with publishers, and not being in an office surrounded by a big marketing team like I normally am. In some ways I have more free time, in some ways I have less. And so being able to have this extra time with everyone, I think gives me an opportunity to kind of put my ear to the ground and try to figure out how we can help the best we can with advice and information. So anything that we can do, let me know. And other than that, I will end this webinar, and thanks for joining.